Hello traders, I'm certain we are all ready to level up our charting game. Today, we are mixing two powerful tools, the Trendline and the MACD. These two setups work so well, it's like combining bread and peanut butter. But before we get to the delicious combo, let's first of all crack open the MACD and see what's inside. First of all, we are going to look at the basics of MACD, what's inside, what it is, and how it works. Then we'll check the components of the MACD, which are the MACD line, the signal line, and the histogram. Then we are going to look at the uses of the MACD, which is the histogram slope and the zero line. So first of all, what is MACD? MACD stands for Moving Average Convergence Divergence. Moving average convergence divergence, and it is used to identify trends and momentum of the price. We all know what trend is. Trend simply means the direction that the price is heading to. If the price is going up, they will say it's an uptrend, and if the price is coming down, it's a downtrend. Likewise, if the price is going choppy or in a sideways direction, we'll say it's a sideways trend, right? And a momentum simply means the power or the force at which either buyers or sellers enter into the market, right? And so there's a difference between trend and momentum. Trend is the direction that the price is going, and then momentum of the price is the force at which buyers enter in a bullish market or sellers enter in a bearish market, right? Now, the MACD indicator consists of three components. We have the MACD line. Let me show it to you. Let me indicate it to you. We've got the MACD line just right here. Okay, this blue line over here is the MACD line. Now, just for now, just ignore this chart over here. This is the volume bar. All right, just ignore it. We are going to look at it, but later in the video. Right, so we've got this blue line serving as our MACD line over here, and then we have the signal line, which is the yellow line over here. Okay, and then we have the histogram, these bars, right, these green and red bars that looks like a service bar. Right, now the MACD line is operated by subtracting 12 EMA from the 26 period EMA. Don't worry about that. The calculation has already been done by our crypto platforms. Okay, so the MACD line is just a subtraction of 12 EMA from 26 EMA, and then the signal line is a 9-period moving average. Okay, and the signal line aims to provide crossovers as an entry trigger. Okay, what I mean is that whenever you see the MACD line crossing over the signal line, either above or below, then it is indicating an entry. Okay, for instance, now this is a signal, this is a MACD line, right, this blue line, and then this is a signal line. So at this very point where it crosses over, it is indicating to you, since the crossover is above, since the MACD line crossed above the signal line, it is indicating to you that there is a bullish move over here, right? So that is what it means by it aims to provide crossovers as an entry trigger. Now, the histogram typically calculates the strength of the trend. The histogram typically calculates the strength of the trend, that is the momentum of the trend. Okay, if the MACD line is above the signal line, it is indicating a bullish move, like I told you, and the histogram displays a dark green bar. Right, now there's a difference between the colors on the histogram bar. If you notice, you're going to see that the histogram bars have dark red and light red, and then there's dark green and light green. So whenever you see the MACD line, which is this blue line, crossing over the signal line, and then the histogram presents us with a dark green bar like this, then it means that the buyers have entered, and the strength of the buyers will keep on increasing in time. Right, so whenever you see this crossover and then the histogram displays this dark green bar, it's indicating a bullish move. Likewise, if the strength of the trend is getting weaker, the green bars become either light green or hollow. Right, in some chart like Bybit, you see that the green bars will gradually start becoming hollow, while in some platforms you see the green bars turning light green. Likewise, on a bearish move, if the sellers are losing power or losing control in the market, the red bars becomes light red, somewhat pinkish. Right, now let's move on to the uses of MACD. Now the first use is histogram slope. Okay, the slope or shape of the histogram gives us a deeper understanding of the trend. So when the price is on a strong trend, let me clear all this. When the price is on a strong trend, the distance between the MACD line and the signal line increases. as a result, the histogram expands too. And when the trend starts to get weaker, the histogram becomes lighter or hollow, like we just discussed earlier, and making the distance between the MACD line and the signal line to contract. So what this typically means is that whenever you see that there's a move, for instance, this place right here, when the signal line crossed above when the MACD line crossed above the signal line, all you're going to be looking at is the histogram slope right here. You're going to see that the histogram slope appreciated, like the distance between the slope increased, kept on increasing like network bars, right? Meaning that more buyers are entering into the market. It is indicating a strong trend, okay? And then yeah, you're going to see that the distance between the signal line and the MACD line is also expanding, right? It's also expanding. The MACD line tends to get, further away from the signal line, indicating a strong bullish entry, right? But whenever you see the lines coming together, all right, if the lines are beginning to come together, then it means that the buyers are losing power in the market. So there's a difference between this place, right? Between this place and then this place. Over here, you're going to see that the lines are separating, and then the histogram slopes and the histogram slope is also expanding, okay? But over here, you're going to see that the lines are coming together and the histogram slope is also contracting. That is how you can be able to see the momentum and the direction of the market using the MACD. So as the histogram expands, we should look for entries in the direction of the trend. And when we begin to notice hollow or lighter histogram formation coupled with shrinkage between the MACD line and signal line, then it is signaling you to exit the trade. Okay, so what I simply mean is that immediately you see this crossover, okay, all you have to do is wait for a confirmation. Okay, as you can see, this is a bullish engulfing candlestick pattern. We all know what a bullish engulfing candlestick pattern typically means, right? It means the red candle being totally engulfed by the green candle. This is a bullish reversal indication. So when you see this, and then you see this crossover happening, and then you see a dark green bar on the histogram, all you have to do is to wait for a confirmation. Okay, wait for a confirmation before entering the market. So after entering the market, you should be vigilant and you should keep on looking at the expansion of this this histogram slope. Okay, keep looking at the expansion of the histogram slope coupled with the expansion of the MACD and signal line. Okay, whenever you see a shrinkage starting to occur, meaning that the histogram slope is getting smaller, and then it has started printing light green bars like this, and then the lines are about to come together, then it is telling you that there might be a possible reversal over here or over here. And as you can see, there was a pullback over here, and there was also another pullback over here. Okay, so that is just the first use of the MACD. Now the second use of the MACD is the crossover. Okay, so a lot of traders like to use moving average crossovers and the exponential moving average crossover to enter a trade. But if you notice, you'll see that depending on the MA or EMA, which is the moving average or exponential moving average crossovers, doesn't allow you to catch up a trend early, because most times crossovers occurs after the market has already shifted. Okay, what I mean is that sometimes if you use, let's say for instance, you use a 9 period and a 24 period moving average, and then the 9 period crosses over the 24 period moving average, it is indicating for you to actually buy, right? So since that is the case, the only problem we have is that sometimes before the 9 period crosses over that 24 period moving average, the market must have gone bullish, and maybe the move must have gone so far, so it makes you catch up a trend late. But using the MACD, if you're using the MACD, the crossovers occurs exactly that time at the point where you should enter. For instance, if you look at this place over this place over here, you'll see that there's a crossover, right? The MACD line crossed over the signal line, and if you align it with if you align it with the chart, the current chart, you're going to see that the crossover occurred at the second candle, the second confirmation candle, allowing you to catch up all this move over here, right? So likewise, if you're using the EMA or the MA, the crossover maybe will occur somewhere here, allowing you to catch just small move before the pullback begin to occur, right? Now this is another use of the MACD line. So it allows you to catch a trend early, right? That's just typically what I'm explaining. So using the MACD line and signal line crossover, it will allow you to enter the market early. Now, that being said, we all know how the the MACD and its component work. Now, how can we combine it with the trend line? So we all know what trend lines are based on the video that we have posted on our public channel and the video that is before this video. If you haven't checked it, just go back to the VIP group. You're going to see a video on trend line. Okay, so trend lines are lines plotted on a chart to actually see the direction of the price, right? We all know that on an uptrend, the trend line is drawn below the candlesticks, while on a downtrend, okay, on a downtrend like this, the trend line is drawn above the line. And we all know that for a trend line to be valid, we have to have at least 1, 2 touch points, or even better, 3 touch points. So looking at the chart over here, you're going to see that we have 1, 2, 3 touch points, right? So this makes our trend line a valid trend line. Okay, so irrespective of the overall move in the market, because right now we are on Solana USDT, and if you check the higher time frame, we're on the 1 hour time frame. Okay, we are on the 1 hour time frame. If you're going to check the higher time frame, you're going to see that we are on overall bearish. Okay, we are on overall bearish, and Solana just hit up, I think, 138 as at the time I'm making this video. So we are looking for a possible reversal. So some traders do halt and pause, exercise patience until they confirm the reversal, while some traders follow the trend. So it's been a while that Solana actually printed an uptrend with a valid 3 touch points on the trend line. I hope you're getting what I'm saying. So now these 3 touch points we have on our trend line validates this upward move, but there's a very big mistake that a lot of people are doing, and I think I rarely mentioned that on this platform. Well, whenever you see a chart, the first thing you need to do is go to a higher time frame, like the 4 hour time frame or the 1 day time frame, or maybe the 1 hour time frame. Then zoom out. Okay, what I mean by zoom out, just pinch your screen, zoom out to see the overall trend line. What is happening in the market? Is it a bullish move or a bearish move? And if you can see, okay, if you can see vividly, you're going to see that it is an overall bearish market. Okay, so whenever the chart is in an overall bearish market, all you should be looking for are sells on futures. And likewise, if the market is an overall bullish market, no matter how tempting a buy signal is, just keep looking for buys. If the sell signal, or if you sense a reversal on the higher time frame, all you have to do is wait for a change of character, guys. Just wait. Trading is 90% waiting. Wait for a change of character, and if that change of character is valid, only then can you start looking for sells in a reversal from the bullish to the bearish. That is just how simple trading is. Just wait and you'll see the chart talking to you. You'll see signals telling you what to do next. Now, since we know we are on an overall bearish market, right, and then we sense a reversal, okay, we sense a reversal over here. Let me zoom it in, sorry. So we know that the market is on an overall bearish, but then we sense a partial reversal over here, and there is a change of character. Let me show you where the change of character is. We all know what change of character is. If the market is moving from a bearish momentum and then it switches and then maybe forms a fair value gap and an order block, and then it's the new high supersedes the previous high, like it goes above the previous high, then we are shifting the structure of the market from the bearish to the bullish, right? So if you can notice something, you're going to see that the previous high over here is at this point, the previous bearish high, all right, the previous bearish high is at this point, and then the market made a new high. Okay, the market made a new high. So if you calculate the distance or the height of this previous high and the new high, you're going to see that the new high is above the previous high. Now this is what we call change of character. Some people do call it market structure shift. Okay, so we are shifting from the bearish to the bullish on a 1 hour time frame. Okay, now all we have to do is to confirm if this market structure shift is valid or not. A lot of traders do confirm this using a fair value gap. We all know what fair value gap is. If you are still finding it difficult, you can talk to me and we'll explain more on what fair value gap is. Or order block. Okay, so there's order block right here. Order block simply means the last bearish move that occurred before a new bullish move, and on an uptrend, order block is the last bullish move that occurs before a new bearish move. Okay, so this right here is the order block. Okay, and the order block came with a bullish engulfing candlestick pattern. Now this is a strong confirmation, and over here there is a very small fair value gap that has been tapped by this by this candlestick over here, which is another bullish engulfing candlestick pattern. Okay, these are like letters, or these are like statements. The market is trying to interpret something to you. So the buyers are coming in strong while the sellers are trying to actually pull back. Okay, the sellers are pulling back. This is a shooting star candlestick pattern. Whenever you see a shooting star candlestick pattern at the top of a candlestick or at the top of a chart, it is either indicating a pullback or a reversal. But the pullback occurred and we have already drawn our trend line. So after the pullback occurred, luckily it dropped on our trend line, making it more stronger. Another pullback occurred over here, okay, with another shooting star candlestick pattern, making this trend line over here to become stronger and stronger, because the more touch points we are having on a trend line, the stronger it is becoming. Okay, so now how do we combine this trend line with the MACD indicator to actually validate our entry? So we are now seeing a reversal. Okay, we are seeing a reversal from the bearish, okay, from the bearish to the bullish. Can you see? We are seeing a reversal from the bearish to the bullish. So we can say that this might be a reversal, not a pullback. Okay, the trend, the structure of the market might be a reversal. We have our first confirmation over here, change of character. We have an order block. We have fair value gap. The pullback came with another bullish engulfing candlestick pattern, and then we have these three touch points giving us a strong trend line, a strong upward trend line. Okay, so how can we enter this market? All we have to do is wait for a pullback. Okay, wait for a pullback in the market. What I mean by a pullback is wait for this market to actually hit this again, because maybe when you go to the market, sorry about that, maybe when you go to the market, the candlestick must have already touched the line and then moved up. So do not look for buys over here. We are now on a bullish trend line, but don't look for buys over here at this level. Wait for the market to actually come back down and make another touch. When it touches the trend line, only then can you keep an eye on the MACD. Okay, keep an eye on the MACD. There's going to be lighter greens, maybe lighter greens over here before the signal line and the MACD line continue to expand. The moment you see the signal line expanding, that is where the volume comes in play. Now let me give a notification. This volume indicator is totally subjected to if you are going to use it or not. It is not compulsory, it is not obligatory for you to use it, but personally I do like to use it. Okay, so the volume tells me who are gaining momentum on an hourly base, since we are on the 1 hour chart. Okay, so the volume interprets the people that are gaining momentum, and right now, if you can see clearly, you're going to see that the sellers are actually in control on this 1 hour candlestick over here, this evening star candlestick right here. Okay, so all I have to do is to patiently wait, since the buyers, because the longer the volume, the longer the more populous the buyers or the sellers. If you see a long green candle, it means more buyers have entered the market. If you see a long red candles, it means more sellers are in the market presently. But a very small red candle like this means that less sellers are in the market, and they are not using high money to actually drive the price down. Okay, so all we have to do is to wait a while, 2-3 hours, since we are on the hourly time frame. If we are on the 15-minute time frame, we're just going to be waiting for each 15 minutes. We're just going to come back and see what is happening every 15 minutes. But since we're on the hourly time frame, we are going to be waiting for hours, right? So depending on how aggressive more sellers enter the market, all we are looking for is for the market or the price to touch this candle and this trend line over here. So when the trend line gets touched, then we are going to confirm to see if the market will actually bounce back or if it's going to actually break through. Okay, if it's actually going to break through this trend line over here. Now if it broke through, it doesn't mean that we are on a bearish continuation. Okay, we cannot be on a bearish continuation until the price actually closed below this low right here. This is our previous low, right? The price must actually come down. Sorry, the price must actually come down to close below this place over here. And when it closes, we are not just going to enter because it might be a fake out. It has to retest this area, and then you are going to enter when it closes above here. That is just it. The market is all about waiting to see the right time to enter into the trade. Okay, so just because it breaks, it's going to break up below the trend line doesn't mean you should just enter. You have to wait until it closes below the previous low, and if you're on a downtrend, you have to wait until the price closes above the previous high. That's just how trend line confirmation works. Okay, so I think you all know what MACD is, the basics, the components, and the uses. You know how to combine MACD for entry using the trend line, and you also know how to use additional volume indicators to check the strength of the trend, right? I hope this video helps. I really want to show you how to use the 9-period moving average, but I don't want to choke up your thinking with a lot of indicators. Okay, all these videos that we are using, all these videos that I am sending to you, I'm not telling you to actually master everything. I'm just giving you varieties of videos and strategies on which one to use. Whenever you are settled or you're comfortable with one strategy, then try your possible best to master it. I have already shown you the place where you can be able to backtest your strategies. This is called goldcharting.com. Okay, this is where I personally use to do all my analysis, and sometimes when I am not in the market, I come here to actually backtest my strategy. There's a replay button over here. Okay, there's a replay button over here. You can just go back in time and then click on this replay, click on the bar. For instance, let me show you something. I can just come over here and then long press this place and then click on replay. When I click on replay, it's going to bring this replay bar. Okay, it's going to bring this replay bar like this, and then this red line over here. So all I have to do is click on this red line and just watch what happens if I click on the red line. When I click on the red line, it erases the remaining charts that have been printed. Okay, so this is where I have to start my analysis from. So let's say, for instance, this is a pin bar. Okay, this is I think a pin bar or a hammer. No, this is a hammer candlestick. Let me show you. This is a hammer candlestick right here. So a hammer candlestick is indicating a reversal to the upside. Okay, for instance, so you can just say, okay, this chart is going to go up, and I'm going to take profit maybe right here if I'm using a high leverage. So let's play it and see if it actually works or not. Now you see how it works. Now this pin bar over here is a valid pin bar. Okay, because it actually printed green candles and we took our profit over here. Now this is just how you can be able to test your strategy and become master on it. I hope this video helps, and I hope you have a nice day.